A senator from Washington.
Mr. President, I would like to spend a few minutes talking about our previous vote this evening, and I know that many of my colleagues have worked hard on regulatory reform legislation, but I also think that it's important that we keep our eye on a very critical part of solving this problem. And I know that many of my colleagues, particularly on the Banking Committee, have had a long history with banking issues and may see things a little differently from the context of the issues that they have been dealing with in the committee. But it has been clear to me for a long time that the deregulation of the derivative market in 2000 led to a very unfortunate situation here, in that before deregulation, we actually had transparent trades and reporting to the CFTC. We had capital requirements, we had speculation limits, we had anti-fraud and manipulation, trader licensing and registration, and public exchange trading. Now, the reason why I bring that up is because, to me, if the derivative crisis brought on a basically world economic implosion, then the principles of this underlying bill ought to adhere to the principles that have been laid out by the White House and others on what would help us fix this problem. We know that it was deregulated, and we know that these things were eliminated, but I take the Treasury Secretary at his word when he wrote in earlier this year, quote, "To contain systemic risk, securities law should be amended to require clearing of all standard OTC derivatives through regulated central clearinghouses." And the reason I bring that up is because the underlying bill before us, even though the Ag Committee corrected this, the language coming in from the Banking Committee basically created a loophole and basically said, you know, if you go to a clearinghouse and they don't want, or say you don't need to be cleared, then don't worry about it. You don't have to be cleared. And it should be no surprise to anybody that the swaps dealers are the people that own the clearinghouse. So in that context, really a fundamental tenet of derivative regulatory reform, exchange trading, clearing, aggregate position limits, and transparency, one of those pillars is missing from this bill. And when we look at what happened because of this deregulation, in 1999, maybe less than $100 billion in the derivatives market, and today we're at a $600 trillion derivative market, $600 trillion. Before deregulation, it was a very small amount of money, and now we have this incredible market, and the question is whether we are going to regulate it to have the basic tenets of true competition, which means there is some oversight and some transparency to make sure that there are not manipulative devices or contrivances in this legislation. So the good news is that we have tried to say that these principal tenets of exchange trading, that you have to have transparency in pricing and real-time monitoring and all of these things should be in there, but you also have to have capital behind the trades. That means to have a clearinghouse. That to have a clearinghouse, make sure that this type of activity is being cleared. So we've had many times before the Senate Finance Committee where the Treasury Secretary said, I'm fully supportive of moving the standard part of those markets onto central clearinghouses and exchanges. We want to make sure that the standardized part of the markets move on to central clearing and onto exchanges as quickly as possible. That was in January. We had another time where we said, the administration said, we need to establish a comprehensive framework and oversight protection of all the derivatives marking, moving standardized parts onto central clearing and central clearinghouses. That was in March. So I don't know why we're still having this debate here about whether we're going to have clearing of these derivatives. To me, it's critical. I know there's other good parts of this legislation that people care deeply about. But if you have this $600 trillion market and you are not truly going to have exchange trading and clearing and aggregate position limits across all exchanges, you are not going to rein in the derivatives problem. You're not. And so I hope my colleagues will take these words from the Treasury Secretary and from the White House and hopefully get a piece of legislation on this floor that will take care of this clearinghouse loophole. I know my colleagues think, we could talk about, building a dam against this wall of dark derivatives. But even something like Hoover Dam, with all the great concrete and all the great engineering and all the great things that make that structure work, still has a problem if somebody drills a hole in the bottom of it. Over time, that's where all the water will flow. And that's where this derivative market is too. If you don't have a regime of exchange trading and clearing, you will have money seeping in to continuation of a dark market. Now, Mr. President, yes, would I like other amendments? Would I like a vote on an amendment by my colleague from Arizona and I, that is the reinstatement of Glass-Steagall? Sure, I would. Sure, I would like to have many other amendments that I think my colleagues out here have been talking about, and hopefully they'll get votes on theirs, whether it's Merkley-Levin or other pieces of legislation that people have been offering. But this issue is a fundamental one. We won't have reform if we don't have exchange trading and clearing, if we don't bring derivatives onto the same kind of mechanisms we have for other products in the financial markets. And if we don't do that, then I don't know what we're doing out here in the context of what brought us to this crisis. Trading of dark market derivatives is what has brought this challenge to our U.S. economy. Let's bring some transparency into that market. Let's adhere these words and actually implement this so we can move on with this legislation.